Hi there, this is routine weekly traffic light update for the week ended on December 2nd, 2016. Prior to going into the detail of the presentation, here are a disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis models and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here are the agenda. Review the latest traffic lights on S&P 500, Dow Jones, and NASDAQ Composite, and look for bearish and bullish trades. For this week, I decided to show only the period of last 10 years rather than typical 20 years on traffic light S&P 500 for more clarity. What you see above right now is updated on December 2nd, 2016. The long-term indicator has shown less risk because the light turned to yellow from orange. Monitoring still required. In 2000, the breach of a red line here, not shown here, but as an example to show here, it breached several times before it penetrated all the way up to the purple line. So the monitoring of these indicators still required. From the clip on November 18th, we compare the current situation to that of mid-2012. In the 2012 period, as the index attempted to reach a new high, as shown here, try to overcome this resistance level, there were pullbacks, like one pullback, two pullback, three pullback. But each pullback is less severe than the previous one as the uptrend continues. And let's observe whether the current market showed a similar trace as it pulls up to the making a new high. One thing we should be aware of that back then, the uptrend was more stronger because I would think the low PE ratio of S&P 500 attribute to it. But the current PE on S&P 500 is about 25, so much higher than before. So don't expect the same strong trend as before. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish red line and bearish green line cross over and showing divergence. In 2010 area, as the index makes a new high, the red line also keep making a new high. In the example of bearish divergence, as the index make a new high, the red line making a new descent. At the macro level, right now, we can see that the current recent high is higher than that of May 2015. Though the red line has been descending, as you can see here, but it bounced off in November 18th week. The bounce confirms the support. But at the same time, you will see that the green line has not descended as in 2010. It actually climbed back up. I will zoom in the graph in the next slide. Here are some bearish and bullish view. On the bearish side, there could be a bearish divergence because as the index forming a new high, the red line is not. Second, instead of continuous descent, the green line continuous descent, it actually ascend. On the bullish side, first, the red line continued to form a higher high, meaning that the current high was higher than the May of 2015. Second, there's a W bottom recently formed. I would say cautiously in the current bullish trades continue. Here is traffic light NASDAQ Composite updated on December 2nd, 2016. We can see similar things in traffic light NASDAQ. As you can see, the red line definitely made a new high, then May, At the current reading, this current reading, the red line is near at the so-called resistance level. If you look across in the past 10 years, 11 years, right now the current level is the second highest level. The highest level was in 2013. I will zoom in the mentioned period in the next few slides. When traffic light NASDAQ reached a similar high in 2010 and 2013, shown in the yellow bracket here. Okay, just a quick refresh. The blue line is NASDAQ Composite. The red line is the money flowing into the NASDAQ. As this red line reached this high level, okay, and when it starts to flatten out, as you can see here, it starts going downwards a little bit. Pullback follows. In this case, in the case of 2013, the pullback to us, it make it new, also changing directions, red line changing directions. And let's monitor whether this situation develops in the next few weeks. Here is a zoom in on the NASDAQ Composite update on December 2nd, 2016. And that NASDAQ is the red line is bullish, and it's catching up to Dow. Here are some bullish trades I emphasize in green boxes. There was bullish crossover on November 14th, and NASDAQ red line is making a new high, and the red line is now flattening now. It's still continuing to ascend. However, also a word of cautious, grain of salt here. I want to show you that the red line the index has descended before the red line starts to flatten out, as shown here in May. In summary, traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ shows more bullish and less bearish signs. Expect pullbacks as indices attempting to reach us or staying in the new highs. Thank you for listening.